Hey everyone, welcome to another episode of The Everyday Trader. It has been a little minute and we are good. We are glad to be back with you guys. This is Greg Jensen from OptionsANIMal. I'm joined as always by my friend and co-host Eric Hale. How are you today, my friend?
Fantastic, man. Things just keep getting better. We've had a
The
good, not that, I think the last time we shared a bunch of videos post Camp Kotok, and it's not for lack of stuff going on. We've just been really busy with stuff. But we wanted to check in with people and talk about what's coming up. I think the most timely thing, unless you live under a rock, the Federal Reserve is supposed to make an announcement next week. And we've got, if you look at the CME's FedWatch tool, it gives you probabilities. I mean, there's, I think, 120% chance of a rate cut, which means we could actually cut twice. So, is it a 25 basis cut or a 50 basis cut? First of all, Greg, are we going to cut?
we probably are going to cut just because there's so much political pressure. I don't want to admit that that's probably the reason why we're going to cut, but obviously the Trump administration is putting enormous amount of pressure through rhetoric aimed at the Federal Reserve, whether it's the direct confrontations that President Trump likes to throw at Fed Chair Jerome Powell and calling him too late Powell and that
It's
he's
not just him, right? I mean, every Lutnick and Bassett. So we've got Secretary of Commerce and Secretary of Treasury taking to social media as well, attacking Powell. Um, I feel bad for Jerome.
I do too. Well, and then you throw on top of that all of the controversy surrounding Lisa Cook and her getting fired, and she's challenging it in court, and it's getting she is going to vote, she's not going to vote. It's just so there's that controversy around it. That's number one, but so that's why I do actually think we're going to cut because of political pressure. Whether we should cut or not is still up for debate. I know the argument as to why the Fed is cutting right now is the weaker than expected jobs report that we got last Friday, um, as well as the revisions downward for the previous, 9 months, some 900,000 jobs pulled out of the growth basket. So the job market doesn't look nearly as strong, at least from the BLS reports. And I
I mean,
know there's a lot of controversy around that too.
I would take the other side of it. So let me just ask any of you, when's the last time you filled out a survey or answered a phone call from a number you didn't recognize? We have a problem right now with a lot of our data and a big issue, and this is a concern. I talked with Holly Wade. You know Holly,
I do.
she's the chief economist for the NFIB, and they're seeing a dramatic drop in survey responses, and they've got paying members who are members of the NFIB. They get a survey and they ask a series of questions, and you've probably seen the NFIB surveys. They're very important sentimental information that comes out. By the way, we had Michigan Consumer come out today that was bad. So these sentiment reports, but they're seeing a tremendous drop. I think like 40% from what they used to have in terms of response rate, 40% drop. And the same thing's happening with these labor surveys as well as the data. And some of the data comes from the states, and there's, it's kind of chunky and lumpy as to when it comes in. But back to the 900,000, if you take that and divide it by 12, it's really not that much on a monthly basis. If did it and annualized, it's not that huge of a change. And it's sort of within the error of margin of, those jobs numbers are choppy, volatile numbers anyway. But economists across the board have recognized that we have a challenge in getting a handle on labor. And I think it's worth a discussion of, if people aren't responding to surveys and the states aren't being proactive and timely and accurate in the data that they provide, you got to coordinate with 50 states and pull the data in. I mean, maybe we should be looking at some other sources. And I wonder, ADP tends to get a bad rap, but I mean, that's paychecks. So, I mean,
Yeah.
ADP processes a lot of paychecks and you can see numbers there. And people criticize the ADP number. I think it's just historically everybody said it's not a great number, but I think maybe it's worthwhile exploring what the problem is. And this is one of the things that's been said is, we need Elon Musk to come in and fix this. How do we get the data right to solve the problem? So the problem on the labor thing is we don't really have a clear picture. This is my problem with if we'll talk about inflation here in a second, but we're not clear that we have a labor problem. It's and okay, so let's talk about. You said we were going to talk about a couple different things. So I had an opportunity last Friday as you know, to go to uh, the New York Stock Exchange for
Nice.
the bell ringing. Yeah, that's my new profile pic right there. And I got to hang out with one of our friends, this guy. So Jim and I were hanging out on the on the floor. He's like, "Hey Eric, let's go for a walk." I'm like, "Okay, let's go." And we just walked around the floor of the New York Stock Exchange. Well, let's just do a little side thing here. I don't know what the purpose of the New York Stock Exchange is because there's nobody there. There's all these beautiful desks, these computers and things everywhere. There's no people. I'm walking around. I'm like, Mark, I said, Jim, where is everybody? He's like, that's the point. Jim says this is the most expensive TV studio in the United States. That nobody needs to be on the floor of the New York Stock Exchange anymore. Everything's electronic. And there are traders who are there, but I sincerely, I don't know. For the life of me, you don't see the pits like you think of those of you that remember watching Trading Places with, Eddie
Eddie
Murphy
Murphy.
and Dan Aykroyd, and they're in the
Yep.
pits and they're yelling. That's the way it used to be in the New York Stock Exchange. And it was pretty exciting to be there to see these marble floors and these beautiful building that they have. It's pretty impressive. But CNBC is broadcasting down there, and there's another sort of online news channel, somebody I'd never heard of. I think they're some crypto company that are there's cameras going around and they're interviewing people. And so I don't understand what the purpose of the New York Stock Exchange is anymore. At least having a trading floor. But
Well,
I got
the same arguments for the Chicago Board of Options Exchange as well, right? I mean, at
yeah,
least the CBOE still has the open outcry pit for the S&P 500.
and the
But
VIX.
that's the only live one that's still there, right? Everything else is.
No, the VIX. There's two pits.
Oh, is the VIX? Oh, that's right. The VIX is an open pit
There's
as
a
well.
VIX pit, which is much smaller than the SPX. And the SPX pit, I was down there a few weeks ago. They were saying that the notional value trades on that floor on a daily basis is $1 trillion. $1 trillion on notional value. That's a lot of trading. And there's, the Citadels and the Wolverines, the Susquehannas, they're all down there trading big
Yeah,
SPX options. So
big six. Yeah. Yep.
Peaks, yeah, they're all down there, and they all have, their trade, and that's where the best pricing is, by the way. So if you're trading online, yeah, that's a different topic altogether. But yeah, so sidetracked here. I had lunch with Bianco, and the jobs number had just come out. So he says, Eric, what'd you think of the jobs number? And I'm like, well, I was traveling today. I saw 22,000. We were hoping 120,000. I said it's bad, and Jim says, was it bad? And he says, if you take a step back and you look at what's happening with regards to immigration and fertility rates. So our fertility rate per woman needs to be 2.1. So every woman needs to have 2.1 babies in order to sustain the same population we have. Our fertility rate is 1.6. And there's a demographic there's a strong correlation to population growth and GDP and economic performance. There's a very strong correlation. So there's this mindset. There's some group of people that think we need less people, and that is not the problem. Just fly over the United States. There's plenty of empty space. We, if you live
Just
in the
ride a bike
city,
across Iowa, right?
yeah, ride a bike across Iowa. So we got plenty of room for people. We need more people, and immigration. If we look at what's happened, their jaw-dropping numbers have been the immigration numbers of people who've been deported and the number of people coming across the border. And if we have negative population growth, so Jim made a point. He says, "What is the right number if we have and this is the first time since World War II we have negative population growth. So if we have a negative population growth, what growth rate do we need on jobs?" He said maybe 20,000 is a good number.
Yeah,
Probably
it's
is.
a fair argument because the hard part with looking at the jobs and GDP situation, along with, GDP still looks fine. The GDP report that came out,
Yeah.
economy's growing. S&P earnings just kind of finished up our earnings season. I mean, did you see Adobe and Oracle this week? And, those are just
Yeah.
two
Oracle
latest.
up 36% overnight.
Yeah. And again, this isn't some little, micro cap company.
Well, Larry Ellison's now richest man in the world,
Yeah,
right?
this was a $700 billion company that added $250 billion overnight. Now that's just a regular day for Nvidia, but that's a different story.
A friend of mine sent me a picture of throwing his intelligent investor in the trash can. This is the book, like up
I,
36%.
I
Like
think
what?
I've got that book right up there,
There it
actually.
is. I see it. Yeah, that maroon book right in the middle.
Yep.
Edited by Jason Zweig. And by the way, Jason Zweig from the Wall Street Journal had a piece out today, though, talking about the crazy silliness that people are investing in. Have you seen? Did you see that? Did you see the headline?
I did not. I need to go
Yeah.
find it.
So
I
it's
mean, yeah, there is silliness out there still.
and
It,
what he's talking about is these leverage and inverse ETFs that are really just taking over the world. We had this reception at the New York Stock Exchange afterwards, and I was hanging around talking to people. And Phil Bach was there. You know Phil. Did we talk about this, or is it?
no, no, no.
Yeah.
You
Okay.
mentioned Phil that you ran into him, but you didn't tell me much about it.
Yeah. So we're sitting around the table. Bianco's there, and Guyed and some other folks are around, and they're like, "Well, what's your best trading ideas?" And you want to know what Phil said is, "I wish I could." So Phil's an ETF expert, and Phil worked in the New York Stock Exchange, so he was giving me some inside scoop. He was down there for 6 years. Um, and Jim worked right down the street too at Morgan Stanley. We went for a walk. Jim showed me where his old office was. But Phil said, I hate to quote Phil, I hope he doesn't mind me saying this. Um, he says, I think the best trading idea is to somehow figure out how to get short of all of these leveraged ETFs and the YieldMax ETFs that retail traders, stupid effing retail traders, are jumping in on.
You
Uh,
did mention some of that, but it was more around the yield max ones. That's right. Because
right.
yeah, these yield max
I don't think I
ETFs,
mentioned it here.
people don't understand what they're
Yeah,
investing in.
y'all need to read the ETFs on what you're getting there. So return of capital is not a good deal. If you give me $1, give me back 15 cents. Okay, yeah, you got a 15% yield, but now what you have is worth 85. So it's not a good deal. And um, I don't know. I was reading a piece last night from Bank of America about the growth of um, the VIX derivatives are back, and they've gone from nothing. There's new VIX leveraged products. Now they're not like the XIV, which was the short that caused Volmageddon in 2018 and nearly brought the market down. That was a short VIX. These are long VIX, but they're leveraged. And so there's some concern that the Bank of America has about what this could do to the volatility. So this Volmageddon could happen again. We got sidetracked here. We were talking about jobs and let's get back to what the Fed's going to do next week. I'm, I think we have an unclear picture on labor. And then the other thing I wanted to talk about was um, inflation, right? Or do we want to, before I go there, did you want to, we've taken a couple side trips. I hope people don't mind. That's kind of the way things go here.
No, that's our MO, right? We take side trips. No, I agree with you that I think that to me it's signs of a bubble still. And I'm not saying that the bubble's popping, guys. That we may just be starting to inflate the bubble. It's been I shouldn't say start. I mean, the move in Palantir last year is this perfect example of the market inflating a bubbles type of stock. I think people have moved away from Palantir. It might go sideways for a while and maybe actually grow into its earnings. But now you're seeing other asset classes take off and having these huge moves. Again, as much as I love Larry Ellison and Oracle, I think it's one of my stocks to watch for the year. Maybe it was last year. I don't remember. I trade Oracle from time to time. When a company adds that type of market cap overnight, I mean, that's a bubble type of environment. There's a lot of excitement in this market, and we could go significantly higher.
I'm
Um,
with you on that.
Especially if we're talking about these VIX futures starting to come back that caused Volmageddon. But
Right.
they're on the opposite side, that means we could have a to the moon Mageddon, right?
Right.
Not an
Yeah.
explosion to the downside, but explosion to the upside right now.
So I think I'm with you. And I think we have a long way to go still on the market, or higher to go. And I always go back to this quote from Sir John Templeton, which is bull markets are born in pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy. The time of maximum optimism is the time to sell. And we're not quite there, but we are getting euphoric. And
We
that's
are.
just everything's a casino, and people don't really give a crap. They just want to jump on board. Have you seen Open?
Yeah.
I mean, it's gone from 50 cents a few months ago to now it's like almost at $10. I think it hit $10 yesterday
Yeah, it
or
was
today.
over $10 yesterday, and now it's down 13% as we speak right now, but back down to $9. But yeah, you're right. This was
You
a
know what's scary is we have a client. You know who he is. I'm not going to say his name, but uh, KC, if you know who I'm talking about. He's
yeah.
in his 80s, and he was asking me to take a look at that this morning in one of my live sessions. I'm like, oh man, this is classic meme stock, and it's going to move all over the place. The liquidity is terrible. The volatility this morning when I looked at it was 230% in IV. That's for the 30-day volatility. The volatility for today was 450%. It's just it's going to do something. It's going to go up. It could drop 40% today. It could go up 40% today. I don't know how you make money on it. If you make money, I think you're lucky. But the thing is, people want to jump on board, and it just, I mean, we're turning things into casino.
Yeah. Another one. Again, we're on the casino name, IONQ. I don't know if you've seen that one as well.
No.
A year ago was a $7 stock. It's at 55 right now. They don't even come close to making money. I mean, but they're a $16 billion company market cap wise now. I'm just,
Let me tell you, it's okay. First of all, it is okay for other people to make money doing
yeah,
things you're not doing. And if you make money doing something dangerous, it doesn't mean it's smart. I hear this all the time. We had a client who was interested in signing up. They've been selling naked calls on stocks, and their exit plan is if it goes up, I'm going to buy the stock. Now, what would happen if you had Oracle and it went up 36%? There's no way you can recover from that. I mean, you're literally picking up nickels, and Phil actually mentioned this. Phil Bach, he's like picking up nickels in front of a steamroller. He goes, but you don't know how fast I can pick up nickels, right? That's what retail traders are saying. I've been picking up all these nickels and I'm doing okay. But that steamroller is going to turn into a Tesla Model S Plaid and go 0 to
well,
60 at
let's just
1.9.
use your example there. Oracle. If and just last week it was at $240 before the gap open. It gapped up to what, 330? It gapped up like $80 overnight, like 40%, like
And
you
you're
said,
selling out
overnight.
of the money calls for 500 or $1,000. And then all of
And
a
so
sudden,
even if you said, "Oh, well, I went and bought the shares," well, the problem is now you bought the shares at 340, now it's back down at 290. 2 days later, it's down $50 in 2 days. So not only did you miss the gap up because you had a naked call, then your adjustment strategy to go buy the shares, now you're down $50 on the back down on the downside. Naked options, I don't care how fast you are not a good idea. They're not a good idea.
yeah. I think I might have shared this here before, but we've got a client, Mike L. I know you've met him when we've done a few summits, and Mike knows that I harp on people for doing naked calls and puts Google leptokurtosis. So leptokurtosis means fat tails. And I'm not talking about apple bottom jeans or anything like that. I'm talking about uh, the fact that you have a normal distribution, and we shouldn't see things that happen out on the tails. Well, it happens about 4 or 5 times bigger than they should. We see moves that shouldn't happen in your lifetime happen every year. And the problem is if you're on the wrong side of those when they happen, it's very difficult to overcome those risk. And the thing is, you can by just giving up a little bit, you can protect yourself just by spread trading, doing bear calls instead of naked calls or bull puts instead of naked puts. When you do adjust, it's so much better. And to look around and say, well, it hasn't happened to me. I'm like, that's a turkey on a turkey farm, right? Every day is the same as the last day. Well, you just expect that it's going to be. The thing is, folks, if you continue putting a bullet and spinning the chamber, and just because it doesn't come up, eventually it will come up. And Mike L's mother, who was trading with James Cordier, had $1 million margin account, and she lost all of that, plus had a margin call of 1.3 million. She lost $2.3 million selling naked calls on commodities. And he wrote the book on options. And there's that videos out there. People can watch it and see people crying. I don't know how you look around and say that happened to them, but it's not going to happen
It's
to
not going
me.
to happen to me. I'm too fast.
You're smart, you're good. I mean, really, you know what? There's a certain contingent of people. I struggle, Greg, with this because I can't convince everybody. But you know what I do have hope with? Because I know there's hundreds of you, if not thousands of you, who've come to me and thanked me for changing their way. So, and for what we teach at OptionsANIMAL and do here at Trader Oasis, there are people who have seen the light and they do say thank you. So I still fret on that small percentage of people that I can't get through to, and I'd love to email me or call me or let's talk. I'm more than happy to have a discussion with you. And maybe I'm missing something, but I'm pretty sure that I'm not. And so you might give up a little bit of something, but to make how much is enough? And we've been doing really well in our trading accounts. And I'm very happy. And I don't get FOMO because somebody else is making more doing something that isn't smart. Don't feel bad about that, people. It's okay for somebody else to make money. And just unless, of course, you don't care about your money. And there's some people out there that don't. This is a game for them. It's a casino. So just keep that in mind. You're listening to people doing things. The other thing I'll point out is in these communities that you're in, that's full of all these very successful people, the people who've had the Mike L's mother who lost 2.3 million, she's no longer in that community to tell people about how it is. It's survivorship bias. It's only the winners that are around to tell you. The losers are no longer there, but we see them. We know they exist. So be very careful with that. My
So what do
rant
you
for the
think? Is the
day.
Fed going to cut? I'm gonna yank us all the way back to where we started.
Yeah, so let's look at something else. So we talked about jobs, and I think we don't have clear data. I think the most prudent thing appropriately is if you're going to do it based on jobs, we have unclear data. We have unclear data. So I think
Agreed.
it's prudent to say let's just hang on. GDP's we're Charlie Balow has that tweet out like we're at all-time highs in the S&P 500. Okay, there'll be just all these superlatives. We hit another all-time high in the Dow and the Nasdaq this week. I mean, stock valuations are way above. We do not need to stimulate this economy. Okay, I don't think we need to. So I think a prudent thing is to wait. But so there's two mandates from the Fed, right? Jobs, and the other one, of course, is what? Inflation. So let me ask you a question, folks. So take a look at this picture here. These are um, looking at the components of the CPI index. So there are 382 things on here, everything from condiments to gift apparel to tobacco, nursing homes. I mean, everything that's on here. So there's 382 items that get on here. And you notice they're nested. So I'm looking at them at level 4, which, so here's cereal products, which is flour and breakfast cereals and rice. And all of that gets rolled up to level 4. If we sort on level 4, if we look at level 4, so you've got rent of shelter, medical care, transportation services, education and communication. So some of you are like, wait a minute, education and communication? That's not important. That's your cell phone bill and your cable bill. So, oh, yes, that is important. So the gray bars are importance. The orange bars are the month over month changes. What side, if we wanted to stay at 2% inflation, we need a 1.8. These numbers need to be, I'm sorry, 0.18. Not 0.4, not 0.4. Okay, there's a negative one. 1, 3. It needs to be 0.18 to hit the Fed goal of 2%. I mean, just do the squint test, folks. Which way is inflation going on these components? I don't know how you can look around and say inflation's going down.
I agree. And for those of you who don't follow Charlie Bolello and didn't get Eric's reference that he just pointed out, let me read you his tweet
Thank you.
from 20 hours ago. Stocks, all-time high. Home prices, all-time high. Bitcoin, all-time high. Gold, all-time high. Money supply, all-time high. National debt, all-time high. CPI inflation, 4% a year since 2020, which is 2x the Fed's target, and the Fed's cutting rates next week.
Okay, let's
You're
see
right.
what happens when the Fed cuts rates next week. Now, traditionally, I didn't pull the chart up, but I've seen it here. It's across my desk. And if you think of the three regimes that the Fed can be in, and that is raising, cutting, or doing nothing, which one is best for the market?
Doing nothing is best.
100%.
Yeah.
That is the best regime that we can have. And when the Fed cuts rates, two things can happen, and it's a bifurcation. It's not quite 50-50, but the market either goes up or the market goes down. And if we're heading towards a recession, the market tends to go down. But we don't necessarily know that for a few months. So I think people should be careful. What do you think happens when the Fed cuts rates? Are we going up, down, or sideways?
With the run we've had, it's hard to say that we still go higher, to be honest. I mean, that's just me. I hate buying things at all-time highs. That doesn't
So
mean
you're in the camp that if the Fed cuts rates next week, the market goes higher.
It probably is.
Okay.
But I don't know.
I think the headlines have been written that are going to say the market's going to go down. And the market, I'm sorry, I think the market's going to respond negatively, and the headlines that will be written, because the headlines are all written, they're just going to pull which one they need depending on what the market does.
Yeah.
The market is going to be freaked out because the Fed sees problems with the economy. The Fed is cutting rates because they see issues with the economy. That's bad. And I think the market pulls back. So 50-50. You could be right. I could be right. I don't know. I wouldn't be surprised if we see that sort of reaction next week. And that's what CNBC and Wall Street Journal will have on the headlines is the economy is bad. And then we go higher. Then we go higher.
The only argument to be made for cutting rates right now, in my opinion, is that we have to service national debt at an all-time high.
That's a terrible mistake. That is not part of the Fed mandate, and
you're exactly right.
Slope.
Yeah, but that's why they're getting the political pressure that they're getting, and that's why I believe political pressure wins this time. I don't know. Maybe I'm wrong.
Well, there is one other reason, and that is specific to if you're on the board, and that is you want Jay's job.
Yeah.
That's the other reason to cut, is if you make Trump happy, you'll potentially become the next board chair. So
I don't know who in their right mind. I mean, I've talked with Chris. You and I both have. We've had dinner with him several times. We've had drinks with him.
I hope he becomes the next president because
I do too, because I trust him.
Yeah, I do trust him, but I think he's. I honestly.
Why would you want that job? That's what I don't understand.
Of course, you want that job. You're set for life. I mean, you're a legend. You're going to be in the history books. Every economist in the world.
You will be in the history. Yeah, if you have an ego and you want to say, I want my name written.
But did you see
stone.
Today? I don't know if you know. Bassett interviewed a bunch of people, and one of the people was Chris's old boss.
I did see that Bullard. Yeah,
Bullard was on the list. I think Bullard would be a great chief.
I actually think Bullard would be a good one. Yeah. I actually agree with that. I've met Bullard once, only once.
Yeah. No, I haven't met him, but he's a good guy. All right. Well, we'll see what happens. It'll all be history next week. So let's wrap things up to try and keep this short. If you stuck around, there's another video that we're going to put out too in this channel. Did we talk about it with the lead lag people?
No, we haven't yet.
Okay, we talked about it before we hit the record button. But Greg and I were on the Lead Lag Network last week talking about collar trades, and this is more of a generic. We did talk about Apple, we talked about NVIDIA and how we might trade it. if you're interested, check it out. We talk a little bit more about the sort of things that we teach people at OptionsANIMal and that we do with Trader Oasis. And if you're interested, at the end, we tell you about a special link that'll get you a deal. So, yeah, give it a check, give it a watch if you're interested. Let us know. We appreciate your comments. Helps us a lot to understand how things are going. So, been getting good feedback that you like these videos. We'll keep them coming and look forward to seeing you.
Thanks, guys.
All right, catch you later.